Hi guys, this is Mark Shawson, the Pattern Trader, and I'm just standing here monitoring the overnight session in the Sunday markets, and there is absolute pandemonium by the twin effects of both the global contagion spread of the coronavirus that has hit Italy particularly hard and is now going all over the world. And then also over the weekend, we learned that there was no consensus at a OPEC meeting. Russia was the huge block at a OPEC meeting, and oil prices have collapsed 20% in the overnight session. The Dow Jones is down 1,000 points. The dollar yen is down about 300 points. The British pound versus New Zealand dollar trading pair went from 202 to 218, $16,000 for every $1,000 you bet. Right now in the overnight session. It's my contention that the markets ultimately go in the direction as indicated by the original patterns. And nobody could have foreseen this coronavirus and the spread and the contagion of what it would cause. But frankly, as you will see in just a moment, in a litany of emails that I have been sending to our members literally over the last several years, that I thought that in 2016 and 2017, the British pound versus New Zealand dollar trading pair had bottomed and was only going to head higher. At that time, prices in pound New Zealand were 165. Tonight they hit 218, 5,000 pips higher than when I predicted the turn 3 years ago. Around the same time, we saw a top, a governing price pattern in dollar yen in the form of a double top and a head and shoulders. Again, I'm going to go the real-time charts in just a moment and show you what I've been talking about. But this is the best example I can think of how markets ultimately go in the direction that the original patterns foretold that they would. And so when we see these outlier events like the OPEC meeting or the coronavirus, to my mind, these are just catalysts to send markets in the direction that they were already headed. So this is not a surprise to me. Obviously, nobody could predict how far and fast these markets would go as a result of some of these global events. But the original chart patterns told you the trajectory that these markets were headed on. And then the catalysts come along and just propel these markets further and faster than they ordinarily would. But the original direction was always baked in the cake. And so, I'm a little bit shocked here. I'm standing looking at my trading account. I've made over 7 figures just in the nightly session. So I've made money a lot in my lifetime, but I've never seen money come into my account this far, this fast. Obviously very exciting, but the last thing I want to do is feel like I'm monetizing on the misfortune of others. I just call the market as it is, as it turns out. There's some things in the background that are sending it there, but I'm just a little bit in shock here as to what's going on in the markets and how fast and far these things are going. But structurally, as well as technically, this price action was always indicating this. So now I'm going to show you what I mean and what I've been looking at on the real-time charts for quite some time. So before I go to the real-time analysis of the charts and show you some of the emails that I sent out, I just thought I would take a quick extract of my own personal account here. This is not to brag. I'm just trying to show you that if you do the right things for enough period of time, that it will pay off, or hopefully that will be the case. So you can see that my account actually went up over 7 figures between Friday session and where we are in the Sunday night session. So the markets really haven't even opened for real. Certainly the financial stock markets in the United States won't open for another 12 hours. So this is the pre-market session where the Dow's down over 1,000 points. Oil is getting crushed. And you can see that I've been holding on to some old positions in pound New Zealand for a long time now, over a month, and just sitting in these positions. And now these positions have gone up over 7 figures just from one session to the other. So I've been holding quite a few positions in pound New Zealand on the long side, as well as dollar yen on the short side. And this is what I've been counseling to our members, that there's been a lot of volatility, a lot of chaos caused in the markets by virtue of the coronavirus and the oil shock and other things. And to my mind, the two best pairs just to camp out were the long side of pound New Zealand and the sell side, the short side of dollar yen. And now I'm going to show you a number of emails going back almost several years where I have been counseling our members to get in these positions based on long-term governing price patterns. I think I just need to say a word before I go to the charts. A lot of you may say that I recognize that there are no stop losses or take profits on your positions. And this is something that I don't counsel, nor do I advise. This is something that I don't normally do. But when I see certain setups, I basically, when they start working in my favor, I don't like to get in the way. To my mind, these pairs are going to go far more profitable, although at the exuberance and excitement in today's session, I'm likely going to offset quite a few. I'm going to take profits on quite a few of these positions. Typically, when you get this increase in volatility in the market, it usually presages some kind of turn. So I'm not going to look a gift horse in the mouth. I am going to take some profits. I've been holding dollar yen for 800 pips now, and you can see that I've got 900 pips just on that 1 pound New Zealand. So I've got literally thousands and thousands of pips on these positions, and I'm now going to lift a good portion of them. But I just want to say that I typically have a stop loss or take profit on my average position, but on some of these, because I saw the long-term potential, I did not do so. But this is what I do for my own risk and account, and I don't advise you do that unless you really understand the cards you're holding and understand the risk you're taking. Now, as we're going to see in a moment, I've been advising our members to camp out in two pairs during all of this volatility, one being the dollar yen and the other the short side of dollar yen, and the other being the long side of pound New Zealand. This was an email that I sent out many weeks ago, several weeks ago, in dollar yen, where I was already short dollar yen at 110.27, and based on recognition of an additional what I call insurance day bar, I advised our members to add to their position at 110.11. Prices, as we just saw, are trading in the market around 102, 800 pips lower than when I sent out this email just about a week and a half ago. And in the email, I said I'm currently short dollar yen at 110.27. I'm looking to add at 110.11 based on the penetration of that inside bar that we see here. I said dollar yen has established several bear price patterns over the past several years, and I said I believe we will see prices retest the lower end of 107.5, which at that time was 250 pips lower and below. And as you can see, I had initial take profit of 106.87, and when I see a market careening in my favor, I'm not going to stop the progress. And today we see that the market is trading in the 102s, and I'm going to start taking some profits at this position with 1,600 pips profit on these two positions in just over 10 days. Now, here are the two positions that I advise our members to sell short in the dollar yen. At the late part of February, just a few weeks ago, above the 110 trading area. You can see that it's trading in the market 800 pips lower at about 102.5. And collectively, it looks like I have over $440,000 in trading profits from those two open positions in the dollar yen. That, to my mind, was a surefire bet based on the long-term governing patterns inherent in that trading market. This is a copy of the email that I sent out about 10 hours earlier in the day before the night session opened. I called it Historical Inflection Points and Opportunities. And in the email, I noted that, to my mind, the reservoir of opportunity on the immediate horizon was the rapidly increasing prices in the Japanese yen across the board. Up until Friday's session, dollar yen had dropped over 700 pips in just the last 2 weeks. With tonight's drop, it makes it well over 1,000 pips just in the last 2 weeks. And you can see here was in my open position management, I advised our members to close their dollar yen positions at 103.17 and 102.11 respectively, based on the daily and weekly positions that were established. That means I made collectively over 1,500 pips on these two short positions, and in the trading account you just saw over $400,000 just on those two short trading positions in dollar yen. This is now the real-time chart of the US dollar versus Japanese yen. As you can see, the dollar yen has fallen 1,000 pips just in the last 3-week trading sessions. Actually, this weekly session just opened tonight, and the market fell 400 pips just in tonight's session. And so we've fallen 1,000 pips seemingly out of the blue just over the last few weeks. But to me, this was never out of the blue. This is a pattern that I've been talking about ad nauseum with our members for several months, even several years. Again, based on the recognition of a governing price pattern, to my mind, the downward trajectory of dollar yen was baked in the cake. And what I mean by a governing price pattern, you can see right here what we call a double top price pattern, where the market does exactly what it sounds like. The market moves from a low to an all-time high, backs off that high, retests the high, and when we have this perfectly formed M pattern, or what we call a double top, where you see two tops in the same area. It's a double top chart pattern, and what that means is a reversal pattern. So preceding the formation of the double top was an uptrend, and once we see the market top with the word top in it, it means that this market on balance will start going lower. And so this is kind of the cheat sheet. When we see these patterns, we then understand the formation, the ultimate direction of the chart pattern, and this is what we saw recently. Now, more recently, you can see that dollar yen has been tracing out this descending wedge chart pattern. To my mind, this is a bear triangle. You can see that we had the fake out here. At that time, I said, is this a fake out or a breakout? And I said it was going to be a fake out, because to my mind, this was the cheat sheet. The double top told me that this market was going to go down. And so when I saw a combination of daily and weekly, what I call insurance day bars, key reversals, and inside bars, I started advising our members to sell short just above the 110 price level. And you can see we've collapsed 800 pips from then on a combination of open patterns, which as you saw in tonight's email, the take profit was triggered around 110.11 and 103.17 respectively, and so took out almost 2,000 pips on a couple of trades in just a few weeks on dollar yen. So notwithstanding the background noise of Corona or whatever the catalyst was, to my mind, this market was always going to move in this direction, and it's just amazing to me how a catalyst will appear out of nowhere and send the market in the direction that it was always headed, as indicated by the governing double top price pattern 5 years ago in dollar yen. Now, the second pair that I have been advising our members to camp out in through all of this Corona volatility is in the British pound versus New Zealand trading pair. Now, it's very ironic that we'll see in a moment on the live charts that British pound New Zealand shot up about 1,000 pips tonight. But to me, it's been no surprise. You can see 3 years ago, in 2017, I was advising our members to buy it based on the recognition of a double bottom price pattern at that time. And I said at that time that prices could only head much higher from current levels. And at that point, pound New Zealand was 175. In tonight's session, we shot to 218, some 3,500 pips higher than where this was trading 3 years ago. And so to my mind, prices going higher tonight was no surprise. It was always indicated by the double bottom price pattern, the governing price pattern in pound New Zealand many years ago. Before I take a look at the real-time chart of pound versus New Zealand dollar, I just want to show you an email that was sent out several hours before the opening of today's session. And pound New Zealand was trading around the 205 area. I'll show you in a moment how pound New Zealand shot up 1,000 pips, 1,300 pips in tonight's session, went from the 205 to almost 218 in this session, and triggered the take profits. So I advised our members to get long around the 203, get out around 212, and that's a 900 pip profit on one position on the daily. On the weeklies, we had a similar thing where I had an entry around the 203, an exit around the 212, and made another 900 pips in profits in these two positions in just a couple of weeks. So collectively, in these two, between the daily and the weekly, we made 1,800 pips over the course of 2 weeks in the British pound versus New Zealand trading pair. Now this is a live chart. You're seeing the live action of the British pound versus New Zealand trading pair, and by I mean action. You can see in tonight's session we shot up about 1,300 pips in the Sunday session, and you'll remember that I sent out an email earlier today advising our members to get out around 211.87. You can see the market has come down a little bit since then, but effectively we got in around the 203, got out at around the 212, and made 900 pips on several open positions on this huge move in pound versus New Zealand dollar. Now, while it looks like this move came out of the blue, there was some serious catalysts and world events that made this market shot up. But to me, it was always baked in the cake. Remember that email I sent out in early 2017 when I observed this double bottom price pattern. Double bottom is just what it sounds like, where price moves to one area, comes back, retests it. When it comes through the neckline, that bottom is confirmed, and that by and large means that this market will move up over time. And since this was formed several years ago, this is basically what we've seen. So while you never know when or how much a market will move, to my mind, this was no surprise. I have been talking to our members ad nauseum on Master Pattern Trader sessions and everything I do, that we are going to see a giant move possibly to the 220 and beyond in pound New Zealand, and I was saying that all the way back in these areas. And tonight's session we got almost back to 220, and we'll see where we go from here. But in the meantime, banked over 1,800 pips on a collection of trades being long pound New Zealand. So I hope you get some appreciation from today's video that price, while it looks like it comes out of nowhere, there's always some governing pattern that dictates the price action. So even though we see world events and crises emerge many weeks, months, and even years later, it was always baked in the cake by what I call the governing price pattern. And we're having a series of webinars to indicate that there's serious scientific evidence behind when we see these patterns, how the markets are likely to move, and this is case evidence of that. So I hope you got a ton of value out of this video, and look forward to seeing you soon. In the meantime, I hope you have a healthy and prosperous trading week, and I'll see you next time.